Good morning, good morning, good morning. We finally made it to Friday. It's Friday, the 18th of July, all day. You join me and Michael Brown for the final morning blast of the week, where we will be giving you a rapid, well, not really that rapid, a rundown, a review of yesterday, a preview of today, etc., etc. But before we go any further, I will get the legals out the way. Nothing discussed on this spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. How are you, Mr. Michael Brown?
Indeed, yes. Very good morning, Ryan. Good morning, everyone. Happy Friday to you all. I'm not
Yes.
doing too badly, although it is a little bit on the warm and muggy side this morning, I will admit.
Yeah, it's got that clammy feel to it.
It has. I've had to resort to emergency measures and return to wearing
Shorts.
short trousers again. Yeah.
Yeah, what, in the office?
No, I'm not in the office. It's
Oh,
a,
come
it's a
on.
Friday, mate. Come on.
Oh God. Well, yeah, I can live in hope. Um, maybe we'll get some pictures of your legs later on the interweb.
Oh, I. Well, only if you pay enough.
Hey, on that note, what's been occurring?
Yeah, let's move on. People want to hear about the markets, not my legs or my fashion attire. And where do we stand this morning? Well, actually, stocks continuing to charge higher on Wall Street. The S&P 500 and the Nasdaq 100 both notching fresh record closes yesterday, gaining 0.5% and 0.7% apiece.
Can't
Oh
stop, won't
yes,
stop.
no, sorry. Good morning, Zach. Yes, here's the attention that you're currently begging for in my Twitter DMs. Very good morning. Your roundups are great. Congratulations. Fuck off
Oi,
now.
he's a valued member of the team.
Well, he can hopefully feel a little bit more valued now.
Yes.
Um, Where was I? Yes, stocks continuing to charge higher, as you said, can't stop, won't stop. There are few signs more bullish for a market that continues to print record highs on an
Yeah,
almost
right.
daily basis, but that won't stop folk on Twitter telling you that you need to be short. In terms of markets elsewhere, though, it was very much a case of sort of what might have been, I suppose. It was pretty dull across the Treasury curve, the 30-year yield lingering above 5% for the third day in a row. Little stat for you, that actually equals the longest daily run of closes above 5% since before the financial crisis. We've only had
Oh,
three such days in May of this year and October
knowledge.
2023. We haven't actually had a 4 day run of closes north of 5% since back in 2007. So
Oof.
one to potentially keep an eye on into the close a little bit later on. In terms of markets elsewhere, the dollar was a little bit firmer on the day, but the dollar index running into resistance at the 50-day moving average, and we have pulled back from that level this morning, allowing cable to reclaim 134 and allowing the euro to move back above the 116 figure. And gold a little bit softer on the day, but frankly, we haven't really gone anywhere for 3 or 4 days now, continuing
Yeah.
to linger around $3,350 an ounce. In terms of catalysts from yesterday, we may as well start off with the solid slate of economic data that we had out of the United States. Firstly, headline retail sales rising by 0.6% on a month-on-month basis in June, well above the 0.1% consensus and a solid rebound from the 0.9% decline that we saw in the month of May. The core sales metrics were also pretty solid, with both the ex-autos measure and the control group measure rising by 0.5% apiece. Of course, the control group, that is the basket of goods that feeds into, or broadly feeds into, the GDP numbers that we will get at the end of next week, I believe, actually. That's come up on us very, very quickly indeed.
Yeah, very much.
I've completely forgot that we were almost at the end of July there. Forgive
Yeah,
me for that one.
right.
We also had better than expected jobless claims figures out of the States yesterday. Initial claims rising by 221,000 in the week to the 12th of July. That is the lowest figure since April. And of course, that print also coincides with the July non-farm payroll survey week. Continuing claims, meanwhile, for the prior week, they rose by 1.956 million, down for a prior 1.965 million, so better than expected there. And we also had better than expected manufacturing data from the Philly Fed, their index rising to 15.9, up from a prior -4, and that is the highest level on that index since February. So very much a day where data reinforced the idea that despite all of the ongoing uncertainty and all of the nonsense around tariffs, under the surface, the US economy continues to tick along well and remains in pretty decent health. In terms of those other headlines, I suppose we may as well mention tariffs because we can't go a day without mentioning it. A
Yeah.
couple of things worth bearing in mind. Firstly, the FT reporting that the EU has been preparing a list of potential tariffs on US services. I think this is important because thus far everything has been tied to goods. Now, it would be an escalation if they moved on to services. Officials in Brussels making clear that this list would go beyond just the big tech firms that have been, well, frankly, a target of Brussels for
Yeah.
quite some time now, if we're being completely honest. And of course, this would come into effect in the event that there was not a US EU trade deal on the 1st of August or whenever that deadline happens to be. The FT were also reporting this morning that the EU were trying to negotiate a sort of tit for tat tariff reduction, which is easy for me to say, specifically around the issue of autos. But again, of course, negotiations continuing on that front. The other thing to mention in terms of trade this morning is a headline that got a lot of attention last night, but for the wrong reasons. Now, the headline, I'm just going to read it verbatim and then I'm going to explain what it's all about. The headline reads US set to impose a 93.5% tariff on battery material coming from China. Now, of course, everyone jumped on that and went, oh shit, is everything going into reverse? Is Trump going mad again? Is the whole trade truce off the table? Absolutely not. In fact, this has absolutely nothing to do with the tariffs that President Trump has been throwing around recently. This actually stems from a court case, if you believe it, that started last November. Effectively, some US graphite producers put a case to the courts to ask the Commerce Department to conduct an investigation into whether China had been violating anti dumping laws. The announcement that we got yesterday was the preliminary conclusions of that court case, effectively
Ah.
saying, yes, China probably are violating the anti dumping laws. And to sort of bring everything back into balance, the appropriate tariff is just shy of 94%. Now, of course, broader trade negotiations between the US and China are continuing, as we know, and a final ruling on this whole saga, specifically around graphite dumping, is not going to come until the 5th of December, which may as well be
No
about a
rush.
century away at this
Yeah.
point, given how quickly things are moving. So, a little bit of a wobble in risk on the headline. Classic case of just go beyond the headline, do a little bit of digging, because
Yep.
there is way more to that than what meets the eye of, oh God, we need to rip up the script again. It's just the conclusion of a legal case, which arguably is quite badly timed. Um, in terms of other bits and bobs from yesterday, we did hear from a fair few Fed speakers, the vast majority of them noting the policy is in a good place and they are just going to stick with this current wait and see policy approach. Of course, the one who didn't endorse that view was Governor Chris Waller, who noted in a speech late last night that the Fed should cut by 25 basis points later this month. Of course, the next Fed meeting on the 30th of July. He noted that risks the employment mandate have increased and that underlying inflation is close to target. This is, well, one, Waller reiterating the view that he outlined a few weeks ago, and two, Waller continuing to pitch for the chair's job. Although it
Yep.
was interesting that in a Q&A after the speech, he actually said, and I don't know whether to believe this or not, that the Trump administration haven't spoken to him about potentially taking that chair job next May. So either he's fibbing or that's true, and he's just going to keep upping the dovish ante and publish remarks until they do eventually speak to him.
Yeah.
But very
Just
much a
just on Waller, he also went further and said there's a strong likelihood that tariff-induced inflation will not drive a persistent rise in price pressures, which is kind of what he's using to back
mm,
up his cut now. But obviously, it seems very much it's more like more. It sounds like the bigger reason he wants to cut now is because that's what Trump wants. But yeah,
Yeah, absolutely. So very much a case of Waller and, of course, Governor Bowman being in the minority here in
yeah,
favouring cuts as soon as the end of the month. You would expect that they will dissent in favour of that view at the July FOMC. Money markets pricing a 3% chance for cut, which is effectively nothing in about a fortnight's time. And that dissent now should not be a surprise because it has been very, very well telegraphed.
yes,
Away from that, here in Europe, a few bits and bobs of political news. The EU, they have proposed a joint borrowing tool to finance 400 billion euros of potential spending in the event of a crisis. The EU have been trying to do this for donkey's years, to be completely honest with you, and unsurprisingly, the Germans are probably going to be quite annoyed about it. And the second unsurprising thing about it is that it will probably end at some point in the future with the ECB buying most of that debt if it is ever issued. But nevertheless, one to watch there as the EU continue their budget negotiations. Sticking with political news here in the UK, Labour announcing yesterday that they're going to give 16 and 17-year-olds the
Oh,
votes in time for the next UK election. Absolutely fucking mental, to be
can
completely
I?
honest with
Can
you.
I? Can I? Do you mind
Go
if I
on,
go on a
go
little
on, go
rant?
on, go on.
So this is
I'll put my feet
absolute.
up for a second.
Yeah, please. This is absolute bullshit. Okay, we all know it. Everyone knows it. Um, the fact is, Labour are looking to get absolutely steamrollered in the next general election. And they're looking for any way, shape, or form that they can gain more votes. Now, one easy way for them to get some more votes is, and I'm no, no disrespect to any 16, 17-year-olds that are listening, but an easy way to get votes is to allow people that haven't got a fucking clue to vote. Because they'll throw some like policies out there, like they're going to cut tuition fees and I know
Mhm.
free ket for school leavers and all this kind of stuff. Anything to get fucking kids to vote with have no idea about what these policies actually mean going down the road, and and the follow-on effects. They're basically just looking for a way to buy votes. It's absolute piss take. And the fact that Starmer came out yesterday, and yeah, I think there was a poll out recently that said that something stupid like 79% of people are against this, and
Mhm.
50% of 16 and 17-year-olds are against it. It's absolute bullshit. Right, this cut to the chase. And then for Starmer to come out yesterday and say, oh, I believe that, some of these 16, 17-year-olds well, he did say a major, like a huge number of them are in the military and working. That's bollocks. Like a huge percentage aren't in the military, and those that are aren't on front line. You can't be front line until 18 anyway. But the fact is, he went on to say those that are paying into the system, and his words, pay in to the system, should also get a say of how it's voted. Okay, Keir, I'm all for that. Therefore, anyone that's not paying in and anyone's not paying tax, tell them to fuck off and they can't vote anymore. Let's do it that way, mate. Yeah? If I'm voting, I get a say. If you're not, sorry, if I'm paying tax, get a say. If you're on benefits and you're scrounging off me, you're not getting a fucking vote. If that's the way he wants to play it, let's do it that way. Right, rant over. Sorry.
Well, no, I think that's very well said. I mean, the other thing with
Thank
that
you.
tax, the other thing with that tax argument is, a 7-year-old leaving school and going and buying an ice lolly in the shop on their way home, they're paying VAT, so they pay
Well,
tax. Should we give them a
yeah,
vote?
right.
I
Yeah,
mean,
exactly
it's
that.
just nonsense. But anyway, that's very transparent. I think
Sorry.
everyone has seen through that very, very quickly indeed. I will wrap up this morning with a few corporate headlines. Uber, they're going to be investing $300 million in a company called Lucid. Apparently, they make electric vehicles. In any case, it gave the shares a bit of a kick yesterday. Lucid trading as much as 62% higher on the back of that investment coming in. What else have we got? We had earnings from Netflix after the closing bell yesterday. Very, very solid earnings
Yeah.
indeed. Actually, Netflix delivering top and bottom line beats while also delivering better than expected guidance, not only for the third quarter, but also for the financial year ahead. Netflix were very, very choppy as those results crossed, but they ended up trading about 2% higher in the after hours session as the dust settled. Amazon, their AWS cloud computing unit, has been cutting a load of jobs. That's according to Reuters, citing a company spokesperson. One for Tom Talks Cars, AI startup Perplexity, which is obviously running Claude, who I fell out with recently. Their valuation. What?
I think it's just I'm just picturing you having a proper domestic with some AI.
I got a bit sweary with him because he couldn't do what I wanted him to do, and
Oh, bugger.
we're on a break now. Apparently, their valuation has topped 18 billion with a B dollars. That's according to the FT. And lastly, just to cover off the morning blast's favourite stock, Pony AI.
Yes.
Goldman have raised their price target on the name from $23 to $26. They closed yesterday at $13.30. I then did some research on this.
Oh,
If
hello.
if you want to be depressed, we first mentioned Pony
Oh
AI
no.
on the
No.
24th of April.
No.
It's rallied 76% since then.
Oh no. Oh. And our methodology was we just like the name.
Oh, it really is the one that got away, isn't it?
Oh mate, I couldn't make it
But
up.
anyway, Goldman are still bullish on them, so
Oh
there
well,
we
there you
are.
go. Well, I'm not getting in now. I'll
No,
give you a
we've
clue.
missed the we've missed the boat.
Oh, Tom's having a go at a pop at you. Apparently,
Oh, fuck's sake.
Claude's made by Anthropic, not Perplexity.
Oh,
There you go.
okay.
There
Good.
you go.
I
Cool.
apologise to Claude in that case.
Yeah, exactly that. Michael, thank you for that. Before we pass back to you, I'll read off some of the headlines courtesy of our dear friend Zach Eisman, who's listening in for the first time. It feels like in ages. Obviously, as always, do follow Zach. Do subscribe to our Substack that Zach puts together with all the overnight news headlines that moves markets that you may have missed while you were sleeping. But starting off in macro space, we've covered Fed's Waller. So let's move on to Trump is expected to announce policy guidelines for AI that will call for easing regulation and expanding energy sources for data centers, while urging Congress to consider federal legislation to preempt state oversight for the emerging technology. That's gone to Bloomberg. Another bullish factor for Pony AI. Foreign investor
Fucking
holdings of treasuries climbed in May, led by a surge in Canadian purchases, in a sign of resilient overseas demand for US government securities in the face of concerns over effects from Trump's administration policies. Um, the US House of Representatives, they've passed a bill to create a regulatory framework for stablecoins, sending the bill to President Trump, who is expected to sign it into law. A slight easing in Japan's consumer inflation is welcome news for the central bank, but stubbornly high food prices will be of a concern for policymakers at the BOJ, whose hands remained tied by tariffs. That's according to the Wall Street Journal. Moving to China, China's exports of rare earth products jumped in June, pointing to a potential pickup in magnet supplies after the government imposed curbs that proved to be Beijing's most powerful weapon in its trade war with the Trump administration. Moving across to the ECB, they can delay its final interest rate cut until December without investors concluding in the meantime that easing is over. That's according to a Bloomberg survey of economists. Goldman Sachs, the vampire squid, they no longer expect the Bank of England to deliver lower rates in September versus a prior. Oh, sorry, I'll start that again. They no longer. Yes, sorry, misread that. Goldman Sachs, the vampire squid, no longer expects the Bank of England to lower rates at the September meeting via the prior forecast of a 25 basis point cut. That's it. They were expecting September, they're now not. Well,
I
now
assume they're
expect
still expecting August, though.
not well. It doesn't say so here. It says they now expect BOE to deliver sequential cuts from November 2025 until
Oh,
reaching a
right.
3% terminal rate in March 26. I've probably got access to that note, so I will dig it out. Um, Britain's stock market is in the shitter. Finally appears to be reversing years of underperformance. We'll give it time. Against the rest of Europe as a UK US trade deal kicks on. Lighter regulation and cheap stocks deliver juicy returns that are starting to attract foreign investors. That's according to Reuters. I'll believe it when I see it. Moody's ratings, they upgraded Argentina's credit rating and upped its outlook. I believe they upped it by 3 notches, but don't quote me on that one. Citing stabilizing and disinflationary macroeconomic reforms. So a win for Milei. Geopolitical news, the EU reached an agreement on the 18th sanction package against Russia because the first 17 obviously aren't working
But
over its war.
I mean,
Sure.
surely when you were growing up, you heard that famous phrase, 18th time's a charm.
Well, this is it. I can't wait for the 28th. Obviously, this is over its war in Ukraine with a raft of measures aimed at dealing with further blows to Russia's oil and energy industry. Taiwan, their vice president, said Taiwan does not seek conflict with China and will not provoke confrontation. But the country's quote, I'm doing air quotes here, aggressive military posturing was counterproductive. Finally, for me, before I head back to you, equities. We've covered Netflix, they're streaming higher.
Oh,
Oh God, Union Pacific is holding talks to acquire the smaller rival Norfolk Southern. Obviously, these are two big train companies in a
yeah, let's
deal
hope
that
that doesn't
could.
get derailed.
Oh God. Oh, bravo. That could create the largest rail operator in the US. Chew fucking chew. BP, they've agreed to sell its US onshore wind business to LS Power as the company continues efforts to pivot back towards its core oil and gas business. This theme about getting rid of ESG stuff has been kind of not just local to PP. It seems like everyone's doing it. We did see
Mm.
GM, I believe it was yesterday, announce a couple of billion in new investment into gas guzzlers, and as they're kicking EV down to touch. Obviously, this reverses years of share underperformance for BP. So it'd be interesting to see if ditching ESG is the catalyst it needs to surge higher. But anyway, back to you in the studio.
Indeed, and of course they've got Elliot, the activist investor, sniffing around trying to
Yes.
push them to that in much more rapid fashion, which is something to bear in mind there as well. Anyway, in terms of today, then, of course, the final trading sessions of the week coming up. The European docket this morning is almost entirely empty, with nothing of any real note on it. And the US docket this afternoon, although there are some things on it, they're not overly interesting, in all honesty. At 1:30 this afternoon, London time, 8:30 on the east coast of the States, we get the latest housing starts and building permits figures. Housing starts expected at 1.3 million in June, up from the prior 1.256 million. Building permits, meanwhile, expected broadly unchanged at 1.387 million, compared to the prior 1.394 million. And then about 90 minutes later, at 3 o'clock this afternoon, London time, we get the preliminary read on consumer sentiment from the University of Michigan. That index is expected to rise to 61.5, up from a prior 60.7. In terms of other bits and bobs to focus on today, we are due to hear from the Fed's Waller again. He's going to be appearing on Bloomberg TV this afternoon. Clearly, his pitch for the job yesterday wasn't enough, so he wants to squeeze in some last remarks today. Of course, the FOMC's pre-meeting blackout period kicks off at close of play today, so at least we won't be hearing from that lot for a week or so. And then in terms of earnings, the most notable earnings release today comes before the market open from 3M, who are just a good bellwether stock, really, because they just make
Yes.
tons of stuff.
Drink.
Yeah, indeed. And of course, given the tariffs as well, it'd be interesting to see how their business model has been affected on that front. And last but by no means least from me, the usual sort of standing reminder for the potential of weekend gapping risk, obviously on any potential trade or geopolitical developments while markets are closed. The other thing to bear in mind this weekend, and probably hasn't had as much attention as it deserves, is that we do have upper house elections taking place in Japan.
Yeah.
This has probably been one of the reasons why the yen has traded so softly in recent weeks. The expectation is that Ishiba, his party, will lose their majority in the upper house. Election results should come through kind of Sunday night, Monday morning here in London. The really helpful thing about the Japanese election is the timing of it, because it's a Japanese bank holiday on Monday. So markets will be reacting to a potential surprise in that election, in a market that will be very, very thin in terms of trading conditions. So if you do have any yen exposures, that is certainly something to bear in mind as we move into the weekend. But other than that, that is all from me for this morning and for this week.
Michael, what do we know? I can't remember when Trump's coming over for golf. Do we know?
It is not next week, the week after, I think.
Week after, because I did see quote from him saying that he is expecting to meet leaders whilst he's over. So I presume he means UK leaders. So obviously Starmer, etc. So that'd be one to keep an eye on when as we move closer to that. But anyway, Michael, thank you so much for another awesome week. Listeners, thank you so much for tuning in. We really do appreciate you. Whatever you're doing today and the weekend. Keep it tight, stay lucky. Remember, if you can't be good, be careful. If you can't be careful, buy a pram. And we'll see you all on Monday. Much love.
Bye for now.